Okay. Hey guys, welcome back. Thank you for tuning in again. So I will have a short session for tonight because I'm a little bit sick, but we'll have this short session just to explain a setup. This setup again, just to explain this strategy, and I'll give you some on my next video, maybe next live. I will explain to you, or we will trade continuation like we have this today. So maybe on Wednesday I'll be trading New York session so that we'll catch some continuation example of continuation trade. But we have the market today gives me, so market open at 1800, but we have a good setup at around 7 p.m. This is a perfect setup. So yeah, so the steps on how to trade this strategy is down. You can check on the description. Right now we are forming a signal. Just now we're forming a signal, and maybe we will trade this. Okay, let me switch my account. I'm on paper trading, so let's lag out. Put us out of that. Paper trading. I'll use my other account. I have an account that almost, yeah, I think it's the one. Okay. Right. So we're waiting right now. We fulfill like one of the signal, which is the cross of the blue line to the green line, and that's our first signal. The cross of moving average 9 to cross below the exponential moving average 21, which is a sign of maybe reversal, or we don't know. So I'll show you this one here. This is a setup. We have a good setup. Number one, we have a cross of moving average MA 9 to EMA. This is an EMA 21, and then after that bull super trend shifted. We're already on bull super trend, shifted from here, supporting the bull market. And then after that we do have a displacement, and then displacement created the market shift and imbalance candle. This is imbalance, or they call it fair value gap. And then we put our entry on the 50% of the imbalance candle, and stop loss according to your risk, but the standard is just below the candle that support the first candle that provide or make this imbalance. Yeah, I cannot talk properly, I'm sorry. But yeah, so like in this example, we we our entry mitigated, so we are in the market, but we are not really sure of the movement, and we saw some early cross, the cross of blue line to the red line, and that's the signal for early exit. If you are not sure of the trade, will go to your direction. So you exit, for example, here, and you did not lose any penny. You still have profit, right? And then this option number one. Option number two is to exit on the blue once the moving average cross the exponential moving average 21. That's an option two. And by this time, maybe you're risking some because you pay a fee, and maybe you only have like 10, or maybe you are negative 10 or negative 50. Depends on the risk or the spread. We don't have a spread on futures. I don't know, commission maybe. Then option number three is the Supertrend shift exit. So by now, if you choose the option number three, you did not hit your stop loss because the price just went here, and you are able to you catch this move if you choose this. So it's up to you. But if you exit here, you can exit here. You can wait for a continuation trade. So a continuation trade is this trade. MA9 cross the EMA 21 and then cross back, and we have a signal. And what makes this a continuation trade? Because the super trend didn't shift to bearish, keep on supporting the bull momentum, and this will tell you that okay, this is a continuation and it's a bull run. And then you will not enter a trade unless you have a displacement, like the displacement that breaks created another market shift, which is this is the one. So you have first signal, market shift, displacement candle, fair value gap, and a market shift. So this is a confirmation. Okay, I'll enter. So you enter here, and then you hit your 1:2. Good trade, right? So if you trade this, it's a good trade. You can also you can if you try to backtest, then you will always see some of this movement. You know, the chart pattern is always like the same. Like it's algorithmic, and it always gives you a setup like this. Maybe not close to this, but it always has this setup. So it's up to you to locate, and if you keep on practicing and backtesting this strategy, and you will get used to it, and you'll get familiar to the market, the pictures, like the chart pattern pictures while using this. So this is easy to use. So right now we have a continuation, and we have a possible continuation trade here again. I hope you're following. If not, just repeat this video. So we have a possible continuation, but I will not enter the trade unless I think we can enter the trade right now. Let's see. Let's wait for the moving average 9 to cross the green line, and then let's wait for a displacement candle to break this, to make it a market shift, confirm market shift, because this one here is already a market shift, but we did not fulfill the steps on how to of the signal. Not fulfill because the moving average is not didn't cross the EMA 21 yet. So let's see. Let's wait for that first signal, and after that, if we have a displaced candle that will start here, like for example here to there, even though we don't have like the candle will close here, but we have a signal, and at the same time we have a candle that will like end up, will close just above this candle, and then the body will be here, like for example that's a displaced candle already, and we have the signal. Maybe we can enter on the fair value gap and put our stop loss here, minimize our risk, and maybe we will catch the continuation today. But you should be very cautious, because I know this by this time period it's still bullish. And remember, Asia opening, it's 8 o'clock. And then this is a pre-market opening, like pre-range opening from Asia. And you always be cautious when trading 8 o'clock to 2100 or 2130. Sometimes there's a good volume from this time, like 2130 to 2200. Sometimes a volume created like a good volume. So just be cautious, just cautious. But you are protected. Don't worry. You have the exit option. So follow these exit options. Uh, it's better to exit early and you have like $50 than exit late and you have like negative 200, right? So yeah, if you ask me, I rather exit here than wait for the super trend, because if it is continuation, you can always re-enter. Wait for a setup again for continuation. So that's why tonight live and lesson is continuation. So just examine this. They are the same. They look the same. No, the only difference is the super trend is always, it's already bull here, so that's why it's a continuation setup. Okay, so that's how continuation setup is. And yeah, so yep. Someone emailed me, and they said my strategy is just copying ICT. Maybe because my terminologies, and because I was an ICT student, and maybe ICT because I'm using displacement, fair value gap, and something like that. But it's completely different because I'm not using liquidity concept, because I really don't understand liquidity concept. I tried to practice liquidity, but I don't know. It's not really. I don't know if that's a real thing. I think liquidity is more on support and resistance. All right, hold on. Yes, kid. Sorry, kid. So that's all, guys. It's just want to show you this liquidity concept. I won't be trading today because tomorrow I'll be trading New York session, and I already, I think, yeah, I don't have, yeah, I won't be trading today. It's because my kids is, I'm sick actually. I have some sore throat, so that's why. So if you are watching and if you're following this strategy, to those some of you are interested. So this is how you trade a continuation. This is an example of continuation. And then just wait for a signal formation. Maybe we will have a good, like, you will cut some downtrend here. All right. Let's see. I will let my kids sleep and maybe I will come back. I'll keep the stream on. See you in a while. All right, guys. So yeah, I'll be ending this session for today. Um, because I'm late. Actually, I'm late to this setup. Uh, I didn't able. I cannot wait until 9:30. and I think there will be a setup at around 9:30, and I'll share to you my what you call it, my prediction. Okay, so I was hoping that I was like I'll go home around 7:30, but uh, I was at work, and I end my shift at around 7 o'clock, and I drove back home almost 30 minutes because it's really traffic. There's an accident on the way home, on the road where I'm the road going to the workplace. So I was late, but I was trying to catch 8 p.m. because I'm pretty sure every 8 p.m. 8 p.m. to 9 there will always be like a one setup. The market will never fail you to have a one setup at least from 7 p.m. to 8 p.m. So, but since I don't trade 8 p.m., I don't trade before 8 p.m. So I'm catching the 8 p.m. for some true like a real movement like the one here, a continuation setup. But I wasn't able to catch on time. I arrived at around 10 already, so I've seen this setup here. But wait for don't trade by now. This is a consolidation. So and the volume is really low. We don't have much room to play. So don't trade for now. Wait for a movement. I think there will be a what around it's already 9 and I don't see any volume. So no, wait for 9:30. But after that, if you can still wait until 11, 11 is the last period for the slow market for me. And after that, you can wake up if you want to trade a good volume. Wake up at around 2:30 a.m. and wait for a setup from 2:30 to 4 a.m. and you will have a good volume. But usually during London session, a continuation setup is the one you will see or you will find if sometimes like this, for example 2:30 and then 3 a.m. The market, if the market reverse early, and what you will catch at around 3 a.m. with a good volume is a continuation. So that's why I'm trying to I will try I will share a continuation trade sooner or later if I'll see one, but I was hoping I catch this one. This is a good continuation, but anyway, I explained to you how continuation setup works. So this is how continuation setup works. And so if you are if I catch this, most likely by this time I'm still on the market because uh, my goal is to wait for the shifting of the super trend, like a real shift before I'll exit. So if this candle will close here, we have a shift. If it will close here, let's see, this is a confirmed shift. All right, and then this is a displacement candle. What? Look at that. And so that's before I go to sleep. I was trying. I wanted to explain to you this. There's a lot of so you see the 15 minutes time frame. If you are support and resistance trader, so the real trend is bearish. That's the real trend from the news that happened. The FOMC news. We have some bull run, and then after that sell out, and until now we're selling out. And if you are like if you're considering the signal on a signal on 15 minutes, we're still on the bear market. And this move here, that the one we're trading right now, is just retest of this resistance here, or this uh for me this inefficiency candle on a 15 minutes time frame. So the real move is bearish, and it will continue to be bear. So that's this is a good one. Okay. So we fulfill all the criteria to enter the trade right now. Look at that. The market doesn't want me to go. Okay. We have a fair value gap, and we have a chance. There's a chance that we may not catch if we put our trade here. Uh, let's see. Let's see, guys. And we do have a displacement. Look at this. Okay. This is a market shift. Market shift. We have the signal there. We have the fair value gap and we have a displacement. Okay, let's try to enter it here. Uh, and then let's sell. Why I'm sell? No, I don't like to sell three. Let's see. I'm risking a lot. Let's see two. Oh, no, no, no. We are not greedy. We're not. I'm not. This account is just uh, for the educational purposes only. Okay. Sell one. Stop loss will be here, which is only 1,120. It's really good. And then let's aim for the. Let's try to aim. I'll remove the. I hope you can we can rewind them. Let's aim for this. Right. So now I might move my okay 180. Not bad. Not bad at all. Okay, if you're on with me, let's see. And I have a tips for you. So once we enter the market, after that go to 5 minutes so that you will not be emotional or just yeah, go to the 5 minutes if you are aiming for 1:2 and leave the market. But if you are aiming to scale, you need to watch out for the trade. You need to, observe the trade if you're aiming to scale this market, or if you're afraid that the market will go against you. So you need to stay on the trade so that you will have a early exit if allows, or if the market tells you to go have an early exit. But if I will go to 5 minutes, we're still on the bull market. That's okay. And then let's see. I think should I take this trade? I think I'll take this trade. This is our fair value gap. We'll go here. Okay. Yeah. So I need to practice what I'm preaching. Okay. Guys, a fair value gap, don't consider the week. Actually, this is a fair. I'm not considering the week because if you zoom this level like on 15 seconds, you have this week here for. I'll show it to you. You see, there's a market imbalance, like a volume. I mean, volume imbalance. A volume imbalance there. Okay. So this is a decent stop loss, and it's far enough that if the market will continue to, and we're risking only 155. So we are in. We're on the market right now. I can risk more just for caution. So my tolerance is, I decrease my tolerance from 500 to only 400. So I am, yeah. You see the optimum entry? We hit the optimum entry. So by this time, observe so that we can, if the bull will continue, just observe, and you can leave your trade once we pass this zone and we create a new imbalance, or once we pass this area here, you can leave the market by putting your stop loss to break even, or putting it to like a, you have a little gain. So okay, let's observe the market. So the market are really respecting this very fair value gap. I'm about to sleep. What happened? It's okay. Okay, you see. So yeah, it's really respecting this area, the optimum entry, the our strategy optimum entry. So yeah, this is, to those of you following, this is our strategy now. If you really agree on me, so this is yours, this is mine, this is yours, this is for us. I don't owe this strategy because it's a moving average. I didn't invent this. Maybe I will not say I dis if I did I discover it maybe, but Yeah, and then I just incorporate some market structure or market formation or a price action that I can say I learned from ICT. Yeah, but uh, yeah, because if not because of him, I won't be able to identify displacement, in market imbalance, volume imbalance. But the only thing really I really don't understand on ICT is I don't know how to catch and liquidity. I've been trying to practice liquidity grab that great. So I think the concept of liquidity is maybe maybe more on support and resistance because I'll show you an example. If this is an ICT trade, this is the liquidity graph here. As said, the liquidity is where the orders, where the stop loss, and where the everything like uh, uh, where are they put. So this is liquidity, and if you this is an ICT, this is said this is a liquidity graph, and then create a displacement, then have a pullback, and then a continuation of the market. So that's liquidity. And I don't know how is that reliable because if I am here, this I will consider this a liquidity, and after that uh, I have a display and then another liquidity. I really don't know. And then if I am here, I will consider this a liquidity pool, but the price didn't grab that liquidity. But still, we have this movement. And oh, because this is a news. But if I am here, this is a liquidity, he said, because liquidity. So there are liquidity all over the place. And how you, I don't know how to identify. That's my problem with ICT. How can I exactly know where is the real liquidity with if there is a lot of liquidity? I don't know. If you're an ICT trader, teach me, and I will be happy to go back to ICT trading. But uh, yeah, so which you call displacement. So a displacement is okay. Oh, so this is also hard to sometimes hard to understand. But like for example, I'll give you two example. This one here, you see, uh, my displacement, my strategy based on my strategy, my displacement is where like this candle. If you go to 2 minutes, this group of candle here is a displacement. It's not only one candle. Sometimes it's only sometimes one candle, sometimes a group of candles. So my displacement is supported by a shift of Supertrend. So if we are only here, this one candle here, I will not consider this a displacement because uh, we did not break this area here or we did not create a market shift. I will consider it a displacement once there's additional candle and this candle. So this one, this group of three candle here is a displaced candles because this is this candle created a market shift. So that's the criteria, my criteria for a true displacement. Uh, candles that created a market shift and then form an inefficiency. Form inefficiency. So this group of candle one, two, three help create a fair value gap and a displacement and a market shift. So that's a displacement because we have a true market shift that's supported by our signal and supported by our super trend. So that tells me that, oh, so by this time, if you are with me, like you traded with me right now, you put your stop loss here. Go to break even or go here. Or you can come here. Why I choose this one? Because we have a breakup structure. So after a market shift, a breakup structure. A breakup structure created is created because we break the structure. We break this one. Here, market shift, breakup structure, kind of the same, but it's continuation. And then again, a displaced candle, displaced, a huge displacement. So what made this, why we have this movement? That's why I'm telling you a while ago that if I'm about to end the shift, but I told you that you wait for the 9:30 at least, and you will see a good volume. And if you notice, if you back test all of the Asia session, most of the time from 9 p.m. to 9:30, there's a good volume, either continuation or a reversal. So why? Because 9 p.m., 9:30 is where most of the banks in Southeast Asia, Japan, most of the office trade hedge funds are open and they're joining the market. So that's why we have a good volume. But by this time here, this is just a retail trader. Because we are a retail trader, we barely touch the movement, and then we are just like riding the algorithm of up and down, inefficiency, breakup structure, market shift. So we're just riding that. But once the big money enter the trade or join the market, this will what will happen, and you will see this a lot during 9:30 of New York session. Uh, now, how you know how to put this? Yes, I yeah, I did not put that on description, right? But I mentioned that many times. But so how, this is how you put yours. So you see, a while ago, my stop loss was here, right? This was my stop loss. So after the displacement that created a fair value gap, our optimum entry should be here on 50% of fair value gap, which is, you see, we hit that. And your stop loss, put on the first candle that created I will zoom it for you. The first candle that created fair value gap, you put your stop loss there. So this is the first candle. I'm sorry. So one, two, three. Of these three candles form fair value gap. This is our fair value gap, a bearish fair value gap. You put your stop loss on the first candle that created the fair value gap. So it's because these two, they're almost equal. So you put your stop loss there. But it depends on your risk. A while ago, I've seen that when I put it here, my stop loss is only like 120, 150. I can put some more cautions. So you can put it there. So it depends on your risk tolerance. So my risk tolerance is only 400. I changed it from 500 to 400. And now I'll be securing this trade. So I'll put my stop loss here. Why I put it here? Because we do have a series of fair value gap. So I know this is not, no, you will not consider this a fair value gap. But this one I will consider this a fair value gap. So I put my stop loss there here because this is where this fair value gap formed. The first candle that formed this fair value gap. So now, yep. So now I secured my trade. I have a very good entry, and I'm not afraid that the market will go against me, because if it go against me, I already have 250 maybe or 300, right? So you cannot find that 200. I was very tired today. It's my actually we moved a state. We came from Maryland and then we moved here in North Carolina. I was I was off. I was laid off like for 2 months. I'm not working for 2 months, so that's where I have enough time to backtest my theory about moving average, and I found this one. And my first day to work in my unit today, I am very tired. Uh, I'm doing a I'm a like a cold blue, when the patient arrest in the hospital, I'm one of the team that responding if there's an emergency or there's a critical patient on any place in the hospital. So I'm one of the person that running there and uh, help them, revive the patient or help treat the patient. And today it's my orientation, and because I'm an experienced nurse, I do have a lot of experience, and they're really expecting more. So I need to show that I'm experienced. So I'm tired. I was show off. So I did a lot of procedures. So that's why. And then I'll be working tomorrow. Okay. So we do. I think we hit 1:2 already. And okay, I don't know. Let me see. This is a good trade. I can sleep with this now. It's 500, and I cannot have that within an hour, right? Yeah. So okay. So thank you so much for tuning in. I hope you can share this to other people who wants to trade. This is ours. Okay. This is not mine. This strategy is not mine. I just maybe discovered it, but yeah. So all right. Yeah. Thank you so much. I think I'm good for tonight. See you tomorrow. If you on Wednesday, I'll be trading the big market 9 o'clock, and you will see how I'll trade there. So there, maybe sometimes you will not see. Sometimes you will not see a pullback to fair value gap, and then most of the time I enter on this first candle. If I have a good displacement, maybe I'll enter here. I'll not wait for that because it, it tend to moves really fast during the okay. So yeah, 1:2 is okay. I have like 480. Thank you so much. uh, I, I really want to wait this market to, this blue line to cross the red before I exit, because they are approaching each other right now. But trust me, this is if I go to 5 minutes. So this is another trick. You go to 5 minutes, look at this. This will tell you that I don't want to exit the market because, you know, we don't have a signal yet in 5 minutes. It's a risky, but I'll be good night, pips. Bye. Bing. All right. So I have 495 for tonight, and I don't want to wait for because I'm really tired. I really wish that I catch up that move, because if I catch that moves, I trade that continuation. Maybe I will have another 500, and we have another. It's almost 1,000. That's a good scalp. If you are still on the trade right now, hold it. If you have a time to wait for it until we cross. Or if you're like just aiming 1:2, like what I did tonight, that's okay. So, and this is strategy. If you're not greedy, just aim for 1:2, and you will always have. So what? I have like more than 1:2. So 2.8 trade. I put my stop loss there earlier. Initially, I put it here. That's my standard. That's the best practice. But since I'm just only risking 150, so I put it there. I'm risking 200. So look at that. Look at that beautiful trade. Like 1:3, 1:3 risk and reward ratio. Tell me any strategy that will give you that at the same time you are comfortable trading and less stress, less emotion. Uh, and then for a couple of, like, how many minutes we trade that one? We start from here, 21:11, like we only have less than 30 minutes, 30 minutes, and we have that 495. Where can you have 495 in this world, right? So I have a three option to uh, blue. When the blue crossed the red, that's the first exit. So as you can see, I didn't cross it yet. Didn't cross yet. Now we're entering a consolidation. So this is a good time to exit the trade and wait for another setup. So that's the first option. Second option is when you really want to, maybe you are trying to catch the trend when the blue cross the green line. Because when the blue cross the green line, that tells us that we have a signal, right? That's a signal for buy, maybe. But until it is not supported by the super trend, so still valid short. But once the super trend shift, that's your last option to exit. And that's a risky exit, because if you will do that, if that will happen earlier, if for example, for example, for a sleep, this is for the service of my fellow traders. So if like if this one this candle formation here or this movement here will happen in here, choose the exit when the blue is across the red, if that happens here. But since it happened here, you already have like 300 by now or 400. You have an option to wait for the blue line to cross the green line, because once that will happen, maybe you still have like 300, a positive 300. And then once the super trend shift to bull, maybe you still have like 200. So yeah, and by doing that, you will have a chance to catch the market. But my prediction, I'm not sure, I'm not correct all the time. Telling you, if you hold this, you will not. If you hold this trade, maybe we're and hit, you can hit it, because yesterday, I think yesterday, trade yesterday, I told you that um, I told when the price was around hovering between 200 20,200 to 120,000 20,250 and 20,200. I mentioned in my live my analysis that the market will maybe this week will at least hit this 19, and I was not expecting really that we hit 20,000 today. I was not expecting. I was expecting that we will hit 20,000 by Wednesday, and then we will hit 19,800 by Friday or by Thursday before, and then Friday we will have like a buyers. And it's a very simple analysis that everybody will and you will never get wrong. So I'll share this to you. Go to 4 hours. 4 hours. This is 4 hours, right? Go to the 4 hours and look at how look at the market doing. Draw your Fibonacci from here to there. This is 4 hours. So from September 9, from low of the September, from low to high. This is in general. So if you were like a trader, like a stock market trader, and you are buying and you're holding and you're selling, those people who bought their stocks here, Nvidia, Apple, like that, Microsoft, m- now they keep on holding. Maybe they keep on holding. They keep on buying. You know those traders stock. They keep on buying. And then if you see this chart, everybody's holding. I will not sell. If I see this, okay, if I bought up the stocks here, I'll still not be selling here because I don't see any like a movement like this. So I'll still be holding. And if I see this movement, I'll be still holding. Now, those people who bought their stocks here, because we're talking about the stocks in NASDAQ indices, because this is a group of like 100 stocks, combined 100 stocks in index. So now some of those people that they want like gain already, now they're starting to sell off, starting to sell off. And most likely we will see the price will go within like 2 weeks or 3 weeks from now. We'll go here. And now the price is really on premium. Now that's like a weak general view. But if you go to 15 minutes, and we're talking about 15 minutes, like within a day, within 3 days, some look at that. There's a sell out here. Sell out. After that sell out, those people waiting to, okay, someone sell out. It's the price is cheap. I will buy. I will buy. Now draw your Fibonacci right there. Now the price become expensive again from that sell out. People sell out here. And they join I know this is a news movement, but it's a sellout. Now someone bought they bought stocks, they keep on buying whatever went to this support. They keep on buying up, they buy again up, and then it's a group of stocks, like combination of stocks. Now here's some sell out, and then we reach again the premium. Now people starting to sell out, and these people are us, normal people. They said the retail traders that always lose to a stock market or to the hedge funds. I have a movie that I want you to watch. What's Dumb Money? Dumb Money is a real. GME, right? Those of you who knows GameStop, that's a good movie. Watch that movie and you will enjoy it. So right now, people are selling off right now, and they are still selling off. So those people here that bought their market, they already gained and they sold. And but people who bought their stock market from this, they keep on selling. So we will see some maybe once we touch here, go up again and then go down until I'm expecting at least by now, by next week, maybe or after 2 weeks, we'll have uh, this psychological number 19,400. We've been there last 3 weeks ago, and there's a possibility that we'll go back there again. But we are not that a trader because our strategy is purely scalping. I know, I'll just copy. If I keep that while talking, well, I already have, right? Uh, so that's it for now. I hope you follow and mm, I you. I hope you understand some of the things that I'm saying. Uh, Son Kato. Yes, yes, sir. No, I'm from North Carolina. Uh, we recently moved here. We came from Maryland, but I'm too far away. I live in Raleigh. I work in one of the hospital here, so we're far from the hurricane. All right, so thank you so much. See you tomorrow, maybe if I'm okay. Even my voice, most likely I don't have a voice tomorrow. All right, good trade, people. Bye.